Hey, good morning, everybody. Today is Friday, January 15th, 2016. My name is Cliff Backus, and this is your push button stock trading daily video market review. Much of what we do at push button stock trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CAN-SLIM to identify the important elements of what he's looking for in a trade. The C in CAN-SLIM stands for current quarterly earnings and sales and reminds us that we should be looking for stocks with a minimum of 25% year-over-year increases in quarterly earnings and sales, and preferably accelerating earnings and or sales. The L in CAN-SLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 17 were from integrated utilities industry. 9 were from utility networks, 8 were from semiconductor devices, 7 came from the restaurant industry, and rounding out the top 5 was application software, with 6 stocks in the top 100 most powerful stocks in the most powerful industry groups. We've seen a lot of restaurants recently in our Spectrum Analyzer, and we've seen a lot of semiconductor devices. Those might be good places to look for leadership in the market when the market resumes the uptrend. Let's start today by taking a look at the Russell 2000. After putting in a new low, the Russell, which appears to be in free fall here, put in an intraday reversal, closing near its highs for the day. But the move was really rather uninspired. Notice how we weren't able to even challenge resistance up here in the 1040 area. The Russell remains in free fall. I think the Russell's the key to the market going forward here. The first hurdle for the Russell to overcome is resistance here in the 1040 area. And then we'd like to see the Russell begin to establish an uptrend. Let's see what the NASDAQ Composite's up to. But before we do that, the M in the CAN-SLIM acronym stands for market. And to my way of thinking, this is the most important element. So let's take a look at the market. Markets fell below important support levels yesterday before what appeared to be a bullish reversal. Indexes and stocks climbed sharply yesterday in what appears to be a short-term rally in a bearish market. That noted, the bounce from an extremely oversold condition in the market was enough to trigger a very suspect aggressive buy signal according to our market timing model. An aggressive buy signal indicates that aggressive traders can buy stocks but shouldn't be employing margin. More conservative traders should continue to accumulate cash. An aggressive buy signal is triggered when the total number of stocks in the S&P 500, the S&P 600, and the S&P 400 indices trading above their 9-day moving averages is greater than the number above their 50-day moving averages. This is a much lower hurdle in an extremely oversold market. We're not seeing any universal watch list stocks even approaching legitimate buy points, so I would take the aggressive buy signal with a very large grain of salt. That noted, advancing issues outpaced decliners by better than 2 to 1 yesterday. However, the New York Stock Exchange advanced decline line remains decidedly bearish. New lows continued to swamp new highs, with 12 new highs versus over 1,100 new lows. Large capitalization stocks bettered small again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. In spite of yesterday's rally, our overbought oversold indicator continues showing an extremely oversold condition in the market. Keep in mind, an extremely oversold market can become severely oversold. Okay, yesterday the NASDAQ was up 88.94 points, or just under 2%. We closed at 4611. But notice how the NASDAQ balked at this trend line resistance right here. We weren't able to close above that trend line, and that's a concern to the bulls. Trading volume yesterday was above the prior day, giving us an accumulation day. For you followers of William O'Neill, the market is in correction. It has been since January 5th. Right now, the NASDAQ is bracketed by resistance at this long-term trend line. This trend line goes all the way back to the beginning of the bull market in 2009, and support down here in the 4506 area. Our market timing model is currently on a sell signal, and let's see what the S&P 500 is up to. S&P yesterday was up 31.56 points, or 1.67%. S&P closed at 1921, and notice how the S&P yesterday was able to better its long-term trend line. I guess that's a good indication for the bulls. Trading volume on the S&P yesterday was higher than the prior day, but the S&P remains in a downtrend, has been since January 4th. Right now, the S&P is bracketed by support at this long-term trend line. If we were to undercut that trend line, again, we have this shorter-term trend line right here. And if we were to undercut that level, the next area of significant support would be 1867. Resistance right now is in the 1993 range. The S&P 500 is on a sell signal according to our market timing model, but our secondary signal right now is an aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but should not be employing margin. More conservative traders should continue to accumulate cash. I would take this aggressive buy signal with a very large grain of salt. We haven't talked about a stock in a while, so rather than get out of practice, I thought I'd talk about Reynolds American. Reynolds manufactures cigarettes and other tobacco products, primarily under the Camel, Pall Mall, Winston, and Kool brand names. The stock isn't on our universal watch list, and I am not recommending that anybody buy anything at this point. But Reynolds American is a defensive stock and is setting up a pretty nice first stage base here. We have a pivot point of $49.56. We get a universal watch list rating of 52%, which doesn't even qualify for our universal watch list. But Reynolds American is a good defensive stock for people who are really jonesing to buy stock. On a move above the 49.56 area, it could be bought. Notice how Reynolds is putting in what looks like it may become a handle here. It takes 5 days to develop a handle. We have only 2 days right now. In order to put in a solid handle, we would want to see volume dry up over the next few days, and we would want to see this handle continue to trend downward for the next 3 trading sessions. If that was to happen, this point right here would become our buy point. Again, our market timing signal is on an aggressive buy signal. I don't trust it. I'm not going to be adding any positions to my portfolio. But Reynolds America, of all of the stocks that I've looked at, appears to be setting up the best base at this point. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.